of the personal consumption expenditures report, and it is day post the debate. We've got some awaiting music to play while we wait to get the PCE numbers today. PCE numbers are expected to come in flat on the month-over-month level, and then at 2.6 for the year-over-year level, with real personal spending coming in at 0.3. We will get those numbers in just about 15 seconds. Today is also, as you already know, coupon expiration day, linked below. All right, here come the numbers, and the numbers are... waiting for them to come through. Still not through. Okay. Oh, there we go. Personal income comes in 0.5, a bit higher than expected. Personal spending comes in at 0.2 versus 0.3 expected. Still don't have the PCE numbers. So a little better on incomes, a little weaker on spending. And there it is. Okay, PCE match. It is a perfect match on PCE. That's great. That's in my opinion what you would want. You don't want any kind of surprise. And as you can see, the Qs looks like we're not really getting any kind of movement out of that. We're looking at the all of it was literally a match. I mean, you had a 0 on the month over month, you had 2.6 on the year over year, you had the core month over month 0.1 as expected with the 0.1, core year over year 2.6, full match all across the board, which is very, very good because frankly, you're looking at pretty low numbers here. 0 and 0.1 for the month over month. This is fantastic. This is actually very, very good from an inflation point of view. And you've got some delicious numbers here from a point of view of core as well. 0.1 and 2.6. It's fantastic. Let's listen to the presentation over here.
There might be a different vice president next time you turn around.
Well, I think the thing that's great about President Trump is that at his heart, he's a business guy, and he understands whether it's a construction worker.
Well, I don't know how we, just went from breaking news on PCE data to right back to politics on CNBC. Interesting. And B, I also don't know why you would get a red candlestick on the Qs here right after that information came out. The only thing I can think of is that yeah, you had the incomes move up, but you didn't really get spending to come up. So you're getting a little bit of a hit here on the Qs. Tesla's getting a little bit of a hit here as well. Let's go see here. Although it's doing really well. It's up like 1.25% here. Affirm slightly down after that. Let me go to the average candlesticks just to make this a little clearer. There we go. Yeah, BTC took a little bit of a hit too. And no, BTC has really been struggling to break through this line. I think it's time. We're going to graduate this to a blue line. It is way too solid. Like, this line just keeps getting hit over and over and over again. So we are officially graduating that yellow line on the 61,741. The revisions. Let's see. Okay, yeah, on the core PCE month over month, you went from 0.2 to 0.3, so you had a slight notch up. I mean, but, okay, that's on the revision. 0.1 more. I don't know if it's that big of a deal. Let's listen in here.
Pushes the metrics of Fed easing and all the associated market activity. If we look at income for May, it was up 0.5%, better than expected, and it's the juiciest level in ties March when it was up 0.5%. We started the year up 1.1%. Now, if we look at spending is less than expected. So the income's holding up, the spending dropping a bit, up 0.2, which actually was last month, but last month got revised to only up 0.1. Real spending adjusting for inflation up 0.3. In March, it was up 0.4, and at the beginning of the year, it was down 0.3. If we look at the price indices, and this is the main reason we're seeing the market move that we are with lower interest rates, PCE price index month over month unchanged as expected, but that does follow up 0.3. Unchanged equals November of last year. To find a smaller number, you're going down 0.4%. That's all the way back in April of 2020. If you look at a month over month of the PCE price, what we're looking at there, month or year over year, is 2.6, and that is 1/10 less than last look. So we're making some progress. It's still not 2%, but many say it doesn't matter if you reach the target as long as the Fed is confident we're going to get closer to 2%. 2.6 actually isn't the lowest of the year. We had 2.5 the first 2 months of the year, just to put a face on it. Now, if you look at PCE core, and this is a month over month, it's up 1/10, exactly as expected. In the rearview mirror, there was actually an upward revision from up 0.2 to up 0.3, up 1/10. To find a smaller number, you're going back to November of last year when it was up 0.09. And finally, year over year, 2.6. This is the core, maybe the most important number, and that follows 2.8. 2.6 is the lightest level, and I'm going to have to go back a bit here. 2.6 is the lightest level going all the way back to March of 21 when it was 2.25. So once again, the markets say it all. We've dropped a few basis points from 430 to 427 and change on a 10, and we have made progress. The real question is how's the Federal Reserve going to handle progress in a world where inflation may return and be bumpy? Are they going to be flexible and lower rates a bit only to raise them again? These are all questions that we really need to answer, and I don't know that we're going to get enough data points to do it before we get the first ease, which still looks like September.
Yeah, okay, all right. I mean, that was a whole lot of recap of what we kind of already heard there, but all right. I know sometimes we get some real passion out of there. Usually it's when the numbers are higher. So, like, I love kind of tuning into CNBC, and if he's passive, kind of like he is now, the numbers are kind of good, and it's kind of a sign that the inflation numbers are coming in low. It's when he's angry. That's when the numbers are bad.
That Powell has been following. That was up 0.1, and you got to go back quite a long way to find what I'm looking here. Let's say back to October 2020. This is the core services X housing. And the year over year on that I can give you as well. That came in at, let's see, 3.39, which is really heading down from where it was. You had good real spending, which was 0.03. So the question was whether or not the consumer was giving it up here. If you take out the inflation component of it and you look at the real spending, it's pretty good. Income, as Rick also pointed out.
All right, I'm going to pull off this here. I want to mention this quickly. Look at this. This is the predicted odds of president. Trump went up to about 61 during the debate, and he's sitting at about 60% now. Joe Biden, during the debate, fell to about 31 cents. Really big red candlestick here. But then after that 39-cent move, actually during the debate, he went from 48 to 39, then continued to bleed out to 31, which then went all the way down to 27. The market is almost convinced Joe Biden is done. And Newsom's odds went up from 11 all the way to a high of 20 at one point. And apparently there's talk now that here, he says that he plans to step up in this video. I want to just briefly listen to this for a moment.
Country, the world. They need us right now to step up, and that's exactly what I intend to do.
Not to belabor the point, but I mean, this was a Biden campaign.
So I don't think she picked up on it there, but this idea of that's what I plan to step up, and that's what, we need to step up, and that's what I intend to do. That's some people are saying, you know, that's him suggesting he's going to run. Other people are saying, no. Right before that, he said, you know, you don't turn your back on Biden.
Democrats delivered. This president has delivered. We need to deliver for him at this moment. With all due respect, the more time we start having these conversations, go down these rabbit holes, it's unhelpful to our democracy, our fate and future of this country.
Yeah, blah, 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 blah. So anyway, people think that this is sort of him setting up for, you know, the takeover, which you kind of can't blame some of that thinking. So anyway, okay, that was interesting. But anyway, a lot of folks think that the stock market is rising right now because the market is starting to price in the potential for a Trump presidency. We did have U.S. Treasuries rise after that, and as the market went up, but as we just got the PCE data, actually, no, I don't think the PCE data moved yields at all. I thought maybe the PCE data would have pulled this back to negative. See, if you look here, full quote details. Let's try to pull this out a little more. 5-day. Yeah, I don't think we really got a movement at all on the yields here. See, this was last night. As the market was starting to price in Donnie T, you actually got yields rising. But this morning, well, there is a drop-off over here at the edge. Let me go a little closer. Yeah, there it is. Yep, right when the data came out. The second the data came out, it went negative. That's what it was. Okay, so we were at about 431, and then the data came out. Boom, there you go. Data said, no, it's okay. You don't have to worry. Inflation's trending down. That's very interesting. Oh, thank you regarding suggesting the banner still says the CNN stuff. Appreciate that. Sorry. Okay. There we go. Fixed. Thanks. Okay, that is interesting. That's quite a drop there on yields, and that's a good thing. You know, we want to see those effective yields come down. Let me see what the predicted world interest rate probability is. It's funny they actually say world probability. I mean, they always give you the United States, but I guess I could change regions. So anyway, you're looking at you're still only at 0.73 cuts being priced in for September, 1.085 priced in for November. Holy smokers, what is this? $50 donation, man. Thank you very much. Long-term demographics in play. Too many old people across the world. Also, interest rates now in play too. Pensions are dumping stocks for bonds. Well, yeah, I mean, I cannot blame people for wanting to buy bonds when you could lock in. I mean, what can you lock in the 30-year for right now? Weekly chart, hear me out. Weekly chart setting up for the Head and Shoulders on yields. Okay, I'll look at the yield chart in just a moment, but on the weekly. But let's look at the 30-year. Yeah, this is crazy. So you could literally right now. I like think about this for a moment. I think this is crazy. I believe very strongly that interest rates are going to be substantially lower in the next decade than we've ever seen before. And a lot of that has to do with the limitations of the boost in productivity that I think AI is going to create, while at the same time, the lack of spending that you're going to get from retirees as they're limited to some extent on money. You are, like you mentioned, you've got more people retiring, but then realizing, there's a limit to how much I can spend. And then just the resumption of the great sort of deflation or great moderation is what we call it. In that case, I suspect, the 30-year mortgage, for example, will be down at, 1% or something like that in the future. Now, what's actually really remarkable of that is before COVID, the 10-year Treasury was sitting at about 2.2, so about half of where it is now, right around here, 2.2 before COVID. Now, today, you could lock in for 30 years a risk-free 4.4%. Now, I'm not saying you should do that over stocks, you know, and how you allocate for your personal portfolio is up to you personally. But I think about that. You could lock in a risk-free 4.4% for the next 30 years. It's crazy. It's a crazy opportunity. I mean, you're almost at absolute all-time highs right now in the 30-year. The all-time high was 4.8. Okay, so big deal. It's 38 basis points under its all-time high. Crazy. So, now I know there are a lot of people who believe that there's going to be this giant second wave of inflation, and that's fine. If everybody thought what I thought, this yield would not be 4.4, right? Because this is the market at this moment in time pricing in what they think yields are going to be for the next 30 years. I personally think they're going to be lower than the low over here, which would be, you know, 1% or something like that. So in a decade, I think the 30-year is going to be probably one of the best investments anybody could have ever made. I'm not saying you should do that. I'm not a bond guy, so I'm just like, I'll just keep playing stocks and real estate because that's my thing. But if I was, like, the way I would do this is if I was somebody who just retired and I wanted to guarantee yield, it's probably what I would do. Because I would look at it as, okay, well, worst case scenario, Kevin's wrong, yields go up, you're still collecting the yield twice a year, right? These pay out every 6 months. And if we're right, you actually have a marketable security. And what you could do between now and then is you could do what the Fed says they do, which I question whether or not they do, but you could try to be
data dependent.
and make up your mind a little bit at a time. So, yes. All right. So, let's see. Wow. I'm honestly still a little bit shaken by yesterday. Like, I had to explain to Lauren why Joe Biden was done. It didn't take many clips. And she's like, wow. She doesn't watch the debates. She's got 7 kids to deal with. That's a lot of work. She's probably got more work than I got. Okay, Max. I don't know how I feel about that one, but okay. Thank you for the Canadian $50. I think that's worth about $10 US. Thank you. You're amazing. Sunday is... I'm kidding. Sunday is my birthday. I'm going to give Kevin... I'm going to call it a thank you. The most valuable thing Kevin provides, IMO, is perspective. The amount of perspective he always gives away on the channel is underappreciated. Thanks for the past 5 years. Here's a nice 5. Oh, that's really nice. Appreciate that. Now you got to come next time in Toronto. I'm in Toronto. I did a quick short profit on Nvidia, so I can do this donation. Nice, thank you. Question: is it possible that the Democratic Party? No. I can't run. No. You gotta fight the. You gotta hit up the Supreme Court first and say that the birth clause of the requirement to be president is racist. And if you could win that with the majority of conservative judges, and you wait at least 3 more years because you have to be 35, maybe. But I think we have a little bit of an uphill battle. Anyway. So when we say a risk-free rate, we're referring to the risk of being repaid. So obviously there's always some risk in everything, but I also think it's weird that they call it the risk-free rate. That's just what markets call it, government calls it. Maybe it's just a giant manipulation, but yeah, I think it's mostly semantics. Most people know it's like, okay, yeah, it is deemed the risk-free rate. Mark Cuban has not said anything after that debate. That's very interesting. Oh, well. All right. Let's listen in over here.
Different businesses, talking to the Utah, Arizona, Nevada, all the coastal states.
Hey, Daly from the Fed. What up, girl?
Small, medium, and large firms is they already feel uncertain. They've been uncertain for the last year. They're uncertain about when inflation's coming down. They're uncertain about the strength of demand. They're uncertain about the global economy. And what they're doing, though, is they're continuing to do their core work, and they're ready to respond to the world that they're given. And I think of that as just generally what it's like to be an entrepreneur.
But there's two types of uncertainty. So, you talk to some CEOs and they say, look, maybe under a President Trump, there might be...
I see Rob Niederhorst here saying Gavin Newsom is basically terrible because just look at California. I don't think there's anybody more qualified to make videos about why I don't like Gavin Newsom. I think I got to get to work. I think I got a lot of work to do in the next 5 months.
Options. The job of the Federal Reserve, we're apolitical, not going to talk about the debates or speculate. The job of the Fed is not to speculate or hypothesize. The job of the Fed is to look at the data, respond to the information, and make the best policy to achieve both our goals, full employment price stability. I don't feel like that is not working. Monetary policy is working. We're getting the job done. And that's what Americans want from us.
Let me ask you a different question. One of the big conversations here at this festival has been AI. Sam Altman has been here. Mustafa Suleyman, who runs Stuff's AI program. Peter Thiel was here yesterday.
Exactly.
And we were all talking about what it could mean for the economy going forward. Sam Altman made a very ambitious prediction, which he believes that over the next 10 years, GDP could double, he said, as a function of AI. Peter Thiel, I think, thought that was a little bit of an ambitious number. What do you think about AI in regard to the types of predictions you might make around what GDP looks like in this country?
Well, in between the enthusiasts or the everything could be much, much better and the fearful, like the world is going to really challenged by this, lies usually history. And so I'm a student of history, and in the middle is where we're likely to be. I anticipate that AI, generative AI specifically, will actually be a boost to the productivity of firms. We're already seeing it. But it's way too early. I mean, way too early to speculate about, especially if you're a policymaker for the Fed, to speculate about the effects. We can't count on a surge in productivity growth, but I do think we should expect it to improve productivity for firms and individuals.
The flip side of that is going to be unemployment, though.
Not necessarily. There's no technology in the history of any technology in the history of the world that's ever reduced employment on net. What it does do, and that's why people are worried about it, is it changes what skills are valued and what tasks are done by humans versus people. But let's just put ourselves in the mind of, we've had automation for decades. We know how this works. Firms automate, they do other things, but people still find jobs. We have to have a responsive and dynamic labor market, which we need to continue to improve.
Another topic here was geopolitics, and a number of panels discussed the idea of tariffs. And I know this gets political again, but I'm curious how you think about tariffs, because they are potentially inflationary. And there's a question mark right now when you look at a President Biden and a former President Trump's plans about tariffs, what that would do to inflation, or whether those tariffs are, whether you're supposed to judge at least the predictions about putting those tariffs on the numbers themselves, or do you say to yourself, maybe these are sort of political cudgels and they may not get used the way they're being described by some of the candidates?
So, it's really useful to be a student of history if you're a Fed policymaker, because you can look over time and you can see that in our economy, we've had different trade policies, we've had different policies on investment, different types of economies, and every time we continue to manage the economy we have, and that's what the Fed's job is. So I'm not in the speculation modality. I'm in the live with the economy we have, and right now we have an economy that still has too high inflation. That's where my focus is.
Let me ask you a different question. How would you grade the economy? Because there's right now, again, it's
I love
political.
this question.
It's political to some degree, but a lot of Americans are saying to themselves, how is the American supposed to feel about the economy?
I love this question because here's the really important thing. You can't give the economy a single grade. It really matters where you're sitting. You're sitting.
I love this question because I'm not going to answer it.
Some of the proceeds of investment and other things, they don't grade the economy very well. If you're sitting in a place where inflation's just eroded your purchasing power and you're feeling the burden of that, you're feeling pretty bad about your future. Other people are feeling good. There's lots of investment out there. So I think the overall thing is my job is to get inflation down at 2%, do it as gently as we can. Then people have the fundamentals that they need to think about their career, their community, their family.
What do you think's realistic? The 2% number.
When?
If we get the calendar out.
We got to keep working on it. I think that we'll continue to see inflation print above 2% potentially through 2025. But every time we make progress on a monthly basis, Americans feel a little relief.
And the Fed should not change the objective, ever.
This is somewhat of a waste of time, but...
I mean, that would be like saying we're going to stay stuck in a box and we're never going to come out and look around. But there is no reason to change our objective, and Americans are trusting us. We said we 2%.
I think long-term, the pharmacies will go bankrupt. Amazon will absolutely destroy retail. You have to think this is a company that's spending multi-billions of dollars figuring out how they can constantly get packages to your door faster and faster and faster. From same-day delivery to, 4-hour delivery to, in the future, less than 60-minute deliveries. Pharmacies are cooked. I couldn't touch them with a 10-foot pole. They'd have to re-innovate or turn into like a GameStop meme.
The nation's leading institutional investors, top strategists, and our very own CNBC contributors. 45% of people said...
But then again, watch, that'll end up being the best performing asset ever, so you could just like inverse trade me on that one. So that's okay. Like I know I can't predict the future. So yeah. We'll just trade. That's what we'll do. We'll trade. Have a long portfolio that's diversified, and then trade around the edges. Get me some more calls, baby. I slight feeling today's gonna be quite bullish. Right. Okay, so there were a couple of Vice President visiting Park City tomorrow. I think the worst job in the world would be Vice President. Now, I understand it could like lead you into and set you up to become president. And that's how Joe Biden did it. And that really sort of rode off the Obama coattails. And that debate yesterday makes you really, like, whether you're a Democrat or Republican, it makes you miss Obama. Like, where's Obama? But, wow. Okay. All right, so this will take a second to get ready. Okay, I'll get that ready. Do you think companies like Hims are the future? Mental health for Hims and Her. I think they provide a good service. I'm worried about what happened with Teladoc. Teladoc, personally, I kind of always thought they were a scam. Well, maybe not always, but like, I never invested in them, I'll put it that way. And I've made a lot of videos talking about how this company is something I would not touch with a 10-foot pole. And unfortunately, their performance has gotten worse and worse and worse and worse and worse. And so, I think what you really have to do if you're investing in Hims long term, I'm not saying they're the same at all. I'm just saying you have to see, why did Teladoc fail and how is Hims going to be different? So, that's more of probably an on-you question. I'm not so well-versed in Hims. So.
Fetch me!
All right. There we go. Let's see then what's inside, shall we? I knew I was gonna get like Obama clown emojis, but I think what I said was pretty clear. Like, compared to what we saw yesterday, I think that's actually quite a neutral thing to say. All right. By the way, I've said this, I feel like, honestly, I'm beating a dead horse at this point. I've said this since, I don't know, like December. I'm like, House Hack is going to wait to buy real estate until Q3, Q4 of 2024 because inventory is literally about to skyrocket. And in my city that I'm in right now, we're up like 2.5x is crazy how much inventory has gone up. It's way more than expected. So that's pretty wild. Pretty wild. I can say, though, having 7 children in this house and the amount of crap that we have now, and it's not even stuff, a lot of it, where you know, I look and I'm like, oh, yeah, we could consolidate or get rid of this. Dude, we are so out of room. It's so bad. It sucks. Because, I mean, you fit, like, 3 nannies at any given time, Lauren, myself, and 7 children in 2,100 square feet. You're looking at 12, at least 12 people in this house at all given times. That at, you know, whatever we are, 2,100 square feet divided by 12. That puts us down at 175 square feet per person. That's not good. Most people have like 3 people living in like a 1,500 square foot home, which takes you down to about 500 square feet per person. You know, other people have a family of 4 and they're in 2,400 square feet, which would take you down to 600 square feet a person. You know, some people have 3,500 square foot homes and maybe it's a 6-person household, but that also takes you to 600 square feet per person. We're at 175 right now. It's a little bit of a problem. Anyway, well, that was kind of funny. After a flying start to the year for risk assets, there are 3 questions to consider. Is slowing U.S. economic growth bad news for risk assets? Bitcoin says so. Does narrow market performance predict, I'm going to use predict, a correction? How are you shifting your asset allocation leading up to the election? I think it all goes up after the election, really. Kevin moved to Vegas. No! I will not move to Vegas. I will wait for a new governor in California. We're halfway through the year and investors don't have much to complain about. Global stocks have posted double-digit returns. High-yield credit has delivered solid income and spread tightening. Commodities have posted gains. Oh, are commodities still going up? Let's look at the BCOM index. They've been going up since February. I don't know if that's continued over the last month, though. No, it's slowed down. So, here you go. Here's your 5-year. Yeah, see, you've gone up since February. You topped out about May 17th. And so you're actually down a bit from your top. Down off the top, about 4%. Maybe like 3%. Okay. Even high-grade bonds, which sold off meaningfully on an inflation reacceleration to the start of the year, are earning enough in coupons to deliver roughly flat returns so far this year. Wow. 2024 is only halfway over. U.S. economic growth is clearly cooling. Russ Gerber disagrees, raising concerns about a sharper slowdown. Who's this by? Oh, UBS. Okay. Alright. U.S. election is coming into view. Below, we address these 3 challenges and explain what we're doing in asset portfolios. None of these challenges are leading us to change our overall tactical allocation, which remains overweight equities, neutral credit and bonds, underweight cash. However, we do have more confidence in sovereign bonds as a diversifier. A diversifier. That's interesting. Bonds as a diversifier. I mean, I suppose if yields are going to go down. You are getting some red candles, by the way, at the moment in the pre-market. Sort of watching this. You get a little bit of a bleed going on Tesla, Nvidia. I don't know what it is with Nvidia and 125. And BTC is kind of a little bit of a bearish indicator right now. Super Micro had a crazy run yesterday. It bounced off 840 and just crushed it. Ooh, Ray Prills. That's a good suggestion. Yeah. No, you know, there's a problem though with going to like a really like a large house. You could potentially create too many relativity issues for children. Children's psychology is really sensitive and moldable and impressionable, and there's a risk to actually having a relatively larger house compared to your classmates that I think is damaging to the children. That's one thing if you live in, you know, like Weston Hills Country Club, Florida, and everybody has a really nice house. You know, then it's equal. Or then you could lose it all and end up in a crap, you know, apartment. But then everybody has a crap apartment around you. So, but when the spread is too wide, I think children get psychologically damaged. So, you know, all your friends are in like townhomes, or let's say 3-bedroom, 2 baths, 1,500 square feet, and you're in a 10,000 square foot mansion. That's going to be a problem. So, yeah, relativity is a problem. Westlake is beautiful. Yeah. All right. Below, we address these 3 challenges and explain what we're going to do about them in portfolios. Okay, so they liked. Okay, the U.S. economy is cooling. Labor market has unwound pre-pandemic distortions, suggesting that further softening in the labor market may not just be hires, but also a rise in layoffs. Housing market, lower income consumers, and small businesses are feeling the pressure. Okay, so what are you going to do about it? Underlying fundamentals remain quite healthy. Seems like real GDP is now in the process of shifting from 3% to a trend like 2%. Let's see what the Atlanta Fed GDP is. Yeah, I get it. Like, we've thought about that too with the plane. Ironically, maybe it's not ironic. Well, actually, it is kind of ironic. That's just a work plane. And they totally discount that. They're like, oh, okay, yeah, that's just a work thing. And so, like, we're not just saying this. Like, we see it. That, you know, oh, they must have more money because they have a bigger house. The plane doesn't even come up. They don't even understand. Which is great. Which is perfect. It's perfect. So, oh, no, that's just work. And it, like, it totally separates from it. It's like, mind-blowing. Oh. So, okay. I don't know why the Atlanta Fed website doesn't load right now. Maybe they're getting CNN. Although you gotta give it to them. You know, CNN, whether it was the lawsuit or pressure, socially or what, I think America won yesterday with CNN's lack of attacks and takedowns. Latest GDP now estimates 2.7. Okay, oh yeah, DJT up 10%. Yeah, so I was asked a lot about DJT yesterday. I said, I remember clearly what I said. I said, I don't think DJT will move much unless Biden gaffes. If Biden gaffes, he will not be the president, and DJT will skyrocket. It was like a gaffe from the first second. Yeah. Yeah, Buffett does live in the same house, you're right. But I don't think he has that many children. How many children does he have? 3. Oh my gosh. One of his children is 70. Another one of his children is 69. And another one of his children is 66. Oh my gosh. And a 66-year-old one has 2 children. The 69-year-old one has 1 child. And the 70-year-old one has 2 children. Wow. The family tree. That's cool. Alright. He's almost on. I know. Fair. Yeah. Okay. All right. Let's go over here. Critically, inflation is starting to come down in a much better, or come in much better than it was at the start of the year. True. Decelerating sharply in April and May. Projects 2% annualized CPI for June. Benign path in the second half of the year. He's probably right. Lower real growth and inflation mean a downshift in nominal GDP. Yeah. In other words, a soft landing. In general, we believe equity should outperform bonds. Yeah, I agree with that. But with growth and inflation losing momentum, bonds should perform better versus cash than they did in the first half. Most importantly, the shifting balance of risk has given us more faith that the stock-bond correlation will shift negative should growth meaningfully deteriorate. Diversifying portfolios of bonds reinforces their value in a diverse portfolio. Okay, fine. Does narrow market performance presage a correction? That's a fair question, AI theme. Like, well, what about the big correction? Poor breadth to suggest that if the AI theme runs into trouble, it will lead to a significant sell-off. Yeah, I've kind of thought that too. It's like that's the only thing to hold you up. Let's see here. We find little evidence that such a narrow market is a sign of a negative forward-looking returns. Okay. Of course, the AI theme remains key, but it doesn't suggest peril. Okay. Fine then. Presage. I think that's... Is it presage? Is that how you say it? Or is it like presage? You know, something to be like fancy.
Presage.
No, it's sage. Okay. We expect investor attention. It's like vase versus vase. We expect investor attention on the U.S. election to rise following the June debate. But yeah. That is the most understated item that we have heard here. Oh, congratulations, Kevin. That's cool. Oh, man. 2024 Trump victory will likely come with tailwinds of fully extended tax cuts and deregulation. Yeah. But more serious headwinds from higher yields via a red sweep. Hey, I don't know about that. And the sheer scale of Trump's threatened tariffs. I think that's a populist thing to say. I don't think we're going to get them. This tariff on all imported goods of 10%, 60% on China. I think this is posturing. Effective tax rate back to the 1930s. Wow, that's a cool chart. Let's screenshot that one if you want a tariff chart. Okay. This is, you know what? Honestly, I gotta give it to them. This is not bad. I think they did a pretty good job here. I think this is a very fair analysis. So good for them. So, why is my... Oh, okay. I see they're just green. Okay. Yeah, I got my, what's it called? Ready to go. My, soundboard. Gotta get that soundboard juiced up. And ready. See, I don't think I've played Selling Spree for y'all yet. Ready for Selling Spree? It's kind of like Killing Spree.
Selling Spree. Poopy doopy.
All right, good job, UBS. Let's listen in over here. Nike tumble. Oh, yeah, what? Let's see what Nike's doing right now. Nike. Wow, 15.9%. Bro, it can't be that bad. Oh, no, it's that bad. Have hooked on to the soundboard? No. Although I did think her line was pretty funny. The best way to get over a relationship is to get under another one. Oh. It's just bad. Or is she right? Oh, yeah. Alright, let me get back in here. Nike, just sell it. Oh. The Nike swoosh for everybody but Nike. Do I have that here somewhere?
Little PP. Coupon linked below. The Nike swoosh.
All right. So let me see what happened here. Okay, Nike. Oh my lord. China missed expectations for revenue guidance. Margin missed expectations by 6 basis points. 6 basis points. No, 60 basis points. 0.6%. Q4 EPS 99 cents. Q4 revenue missed slightly. Taking actions to reposition Nike to be more competitive. Yeah, that doesn't sound good. Foot Locker falls, Dick's down. Converse revenue down 18% year over year, experiencing shifts in consumer traffic, especially in China. Yeah. Lower Nike digital, especially in the first half. Revenue down about 10%. Oh, Nike just got reamed. Reamed and creamed. Wow. Ay. Oh my goodness. Okay. Fine then. Let's see what we're gotta do now. I think we gotta listen to the doomers. I'm really I'm really nervous about going to Fox Business. But I think we have no choice because the others are on commercial. Triple creamed. Yes, that's what we need.
Triple reamed.
I gotta get a creamed version too. Alright. Literally all of them are on commercial. Losers. Alright, so what else? I don't know, I'm still a little shocked about yesterday. Like, I feel like I was not expecting it to be that bad. I don't know that, honestly, anybody was. Like, I think everybody was joking, like, there was the risk, you know? It's like, oh yeah, he might poop his pants. Honestly, it would have been better if he pooped his pants. And we had, a good debate. Like, if you had to pick, what was better? That performance, no poopy pants? Well, as far as we're aware. Or great performance, but poopy pants. Well, I think we could say with what happened yesterday, that was probably the worst thing that could have happened. So poopy pants might not have been that bad. We could solve that. You could solve poopy in the pants. I can't solve what happened yesterday. Oh, man. Okay, all right. What do we got over here? Oh, my gosh.
There's a lot more to Virginia than just...
Of course they're doing politics.
And Loudoun counties, as we're seeing here. A lot of Trump supporters out here for this rally. Earlier, Virginia's governor spoke about why he thinks this race is now so close.
What?
It's 3.5 years of a failed economy, failed border, failed national security. Right.
Okay, all right. We get it, but it's not that close anymore. Ellis, I'm sorry. My gosh. Ellis in the chat here says, every adult has pooped their pants. Let's be real. Can we have an F in the chat for Ellis? I guess he's poopy doopied a lot. Sorry. Here, I'll start. all right. So, let's see here. All right. That's funny. All right, 11 minutes until market open. We're going to be watching DJT and obviously Nike. Sorry, man. You asked for that one. So, we are looking at Nike right now, and it's just getting worse. It's not getting better. And then we're looking at... let's see, DJT. Oh, NVIDIA's actually giving up a little bit as well. I'm actually somewhat surprised because I was kind of expecting this day to be a little bit more of a clear bull move. And Tesla's sort of bleeding a little bit of the gains they've been having. So have the Qs, so is NVIDIA. I'm surprised by that in pre-market. I actually don't think that'll be sustainable, and I think the day will be relatively bullish. But it actually might be the stock market that leads Bitcoin today. No guarantees. I mean, we'll know soon.
Stop taking is raising still on the table? Because these are not numbers for raise. You could very easily argue, well, listen, we got to really slay it. It's kind
Joseph says, would you ever reconsider entering politics? Maybe one day in the future.
But I do think that it's going the right way.
Adam in the chat's like, he may have actually booped his pants, and then links to Matt Wallace. You know, some of the Matt Wallace posts are funny. You know, we did an interview with Matt Wallace. And, yeah, a lot of these. Yeah, we went to his house.
3 months, and I think that Jay will say yes. But by that point, we'll be at 4.4 on the unemployment. At that point, we will be looking at nothing going up year over year. They need to change the way they tabulate, because they need to recognize that America shops at Walmart and Costco. And Walmart's everyday low price and its rollback prices for thousands of goods. And Costco has rollback prices for, and they don't have as many SKUs. And by the way, Amazon has rolled back. And if you want to know what's going on, take a look at the prices at Walgreens, because they needed inflation. That was, by the way, I like Tim Wentworth very much.
I know you do.
That was a very
hard quarter to watch.
That was a very hard.
A lot of things hard to watch.
Hey, by the way, all the guys that I've been saying tough things on, I think are terrific people. It doesn't matter. It's not about friends. It's about money.
Right. When we come back, we'll get Kramer's Mad Dash. Bunch of names to get to today. Got some downgrades of not just Nike, but Google today.
Yeah, that was fatuous.
Some initiations of names like Cat. A little bit more on Micron and Sanjay's chat with Jim last night. When we return.
I have to say, I just love the CNBC, like the tunes they got. They're really good. It just, I don't know, it kind of reminds me of the COVID days. Oh my gosh. Oh, those are sick. Quite literally. Q1 revenue. Yeah, okay, so their forecast. Okay, yeah. Forecast revenue for next quarter down 10%. That's Nike. Disaster. Okay, I'm gonna do a quick summary there on that UBS piece. So UBS thinks, I like that tariff chart a lot. We got to get that, and then we've got to, let's see here. What else do we get from UBS? Oh, they see GDP leveling at 2% for a soft landing. Sees GDP leveling at 2% for a soft landing. Atlanta Fed currently at 2.7%. We did on PCE, we got roughly at expectations. And then UBS sees inflation basically settling out to being relatively benign for the rest of the year. As benign for the rest of the year. That doesn't mean they're going to be right. Also think low breadth won't cause a large sell-off Yeah. So that's interesting because that is a very large concern that a lot of folks have about the economy. I want to substitute Powell and turn the printer. I want Kevin to substitute Powell and turn the printer on. Let's go. Should I keep buying Tesla? I can't give personalized financial advice, but I did just make a few videos over the last few weeks on my channel that Tesla stock is about to explode. And let's just say it's been like daily that I've been picking up some calls on the sucker. So I think frankly you need to clear out the $200 order book. And I've said this also. Once you clear out the seller's order book right at 2, I think you might be you might be at 220 to 240 pretty damn fast, especially before the robo-taxi event. Yeah. All right. Let's try Doomburger. Right here.
JP Morgan Wealth Management.
Oh my gosh, just an ad again. It's all ads. That's all they ever get. Ads, ads, ads. All right. Nike's still falling. Down about 17%. Zoom out. This is the week chart on Nike. Lost that $100 support level. Going now to 78. Oh, it'll be down to here. Oh, it'll be down to that low. Right here. Yikes.
Recommendations on Wall Street this morning. And first up, UBS cutting Nike to neutral after the company's outlook fell short of expectations. The analysts there writing that Nike's fundamentals are, quote, much worse than we realized. Now, that UBS call follows a number of analysts downgrading Nike and shares absolutely plunging pre-market. Next up, Seaport Global raising its recommendation on International Paper to a buy. The firm sees positive trends after the Brazilian company Suzano said it would end its pursuit of the U.S. paper giant. And finally, we do have Raymond James initiating Deere as an outperform. The firm says it's bullish on the ag equipment company, citing its leadership position and technology investment. And those, of course, are some of our morning calls. Let's take a look at markets right now, just moments away from the start of U.S. trading on the last day of the first half of the year. You can see S&P 500 futures a little bit higher right now, about 0.1%. You take a look at big tech, that NASDAQ 100, a little bit higher than that, up about 0.2%. And small caps actually are your big leader today. You can see the Russell 2000 up about 0.9% in the pre-market. Of course, we've got some good news on the inflation front this morning. Now coming up, Nicole Inouye. She is HSBC Head of Equity Strategy Americas. She will be joining us for the second half of the year outlook. This is Bloomberg.
Nice. That was a cool little sizzle. I'll give them that. Nike, that's a little bit of a sign of, the consumer recession that Cathie Wood has been warning about. She's actually got I'll probably today drop my interview with her, and it's pretty clear that the cracks of the consumer are coming through. So, we'll see. We'll see. All right, let's CNN Fear and Greed Index still sitting at about neutral 46. Let's jump on over here. Let's see.
United Healthcare.
Oops, didn't mean to go there. 85. There we go. All right, 2 minutes to go until the bell. This will be entertaining. Oh, also on commercial, of course there. So 2 minutes to go until the bell. We are coming off a good, benign PCE reading here. We're coming off a pretty bullish, for the market at least, campaign or debate yesterday. Market prices in Trump more highly, as more positive for the market. And we are looking at Nvidia up about 0.5%. For some reason, Bitcoin losing the 61.7 level, which is a pretty important level. Tesla's up about 1.0, but you know, there's been a lot of enthusiasm that once Tesla breaks this 200, it's you're in a game changer. So we'll see what happens here. All right, let's get who wants to be a millionaire ready? Yeah, it should be really entertaining. All right, so here we go. Boom. Oh, too early. 30 seconds. All right, 10 seconds to go. Here we go. Bam, bam, bam.
What kind of new investment? Over and over again, we keep hearing we'd like to hear something a little more aggressive. This is more aggressive. $7 billion name. I've had Dan on a bunch of times. I feel really good about the idea that whoever's president, solar power is going to be the predominant source of growth in our grid.
Let's get the opening bell here at the big board oil and gas production company Landbridge celebrating an IPO. We're going to talk to the chairman and money movers today at the NASDAQ. Immunology biotech Illuminous also celebrating an IPO. Jim, piece on the tape today. Best start for U.S. IPOs in 3 years.
Well, I mean, that's just quite good news. There was a negative piece today about Thermo Fisher. And they said TMO, which is a great company. Mark Casper, he's Dynamite CEO. And it's talking about how there's not enough biotech money coming in. I think that that's going to be, as you witness in the NASDAQ, that's where the deal's going to come. Because what will happen is, if you get a new president, people might think that we're going to get a new one. One of the things that the FTC has been really against.
I want to hear Jim's thought for a moment.
That involve biotech. But the way that these big companies get their pipeline is to buy companies that are smaller. So that's what I'm looking for. Another great, Danaher, which the club owns, Thermo Fisher. Great ways to play if you want to think there's a pull-through and Trump becomes president.
Reminds me of this 161-page initiation of industrials and machinery over at Ray J.
You know, that is
where they initiate, outperform Deere, Eaton, Parker Hannifin, and URI.
Yeah, this is I don't know if you remember the Battle of Borden in War and Peace. I think it's like on page like 600, like 700. Yes. Well, that's where I am on the Battle of Borden.
Okay, all right. So let's take a look at what's going on here. We've got some moves over here on what looks like Tesla, kind of like all over the place here at the first part of the day. You've got, you had a red candle, then you had a big green candle, now you got a big red candle, so you're a little bit all over the place on Tesla at the moment. You've got the Qs sitting, rotating down a little bit. Nvidia gave up all of its gains, which is really bizarre. Tesla's continuing with that red candle there. Affirm's trying to pop a little bit. Bitcoin's a little on the bearish side as well, not great. Palantir's trying to go green candle. Salesforce is trying to push green candle. And so is Snowflake. Now, keep in mind, yesterday, these software companies, oh yeah, Tesla's not happy with that candle at all. But you've got some really interesting activity on these. I'm going to watch them today. The Salesforce had a big move yesterday. Salesforce right here. Look at that. And then... let's see here. You've got, see Adobe. I don't know what it is today with the software. It's just moving. So I think that's very interesting. Let's see here. Okay. There we go. Okay. Software gets a little pump. And then, big drop there on Nvidia. It's just sort of out of nowhere. Tesla's got a green candle here. It's just a little sideways, though, so you got to be a little careful here. Nike, we've got some recovery on Nike. All right, let's listen back in here for a moment.
When you go into these chat services, any of the generative AI, they're so much better than they were 3 months ago.
Oppi, by the way, takes Apple to 250. That's the three firms that are in the 250, 260 range.
I know.
We did get Vision Pro launching in China at higher retail prices than here.
That surprised me. Over in Asia and Japan, that seems high because it's not selling all that well. I'm a believer in the product, but I feel very lonely. This is not, I mean, look, Justice Department is after Apple. Why? Because it's Apple. I mean, you know, one of the things that I think bothered business very much is that they work backwards to justice and FTC. Okay, who's too big? As Teddy Roosevelt did when he was looking at Standard Oil. But Standard Oil had 100% of the market because they lowered price everywhere and wiped out the competition. So, I mean, these guys do think that they're trust busters like TR, which, by the way, everyone made a fortune when they broke up Exxon, including John C. Rockefeller. But I think that the market is not going to just roar here because I think there's also a group of people who just say, you know what, I had to take money off the table. This is too crazy.
Well, to that point, Goldman's Tony Pasquariello today, really interesting note. He's been very constructive. My instinct is it would be a good time to tap the brakes here. Probability of a drawdown is rising.
Yeah, see, I read that piece and I said, well, you know what?
It's kind of like the opposite of what you've heard over from UBS this morning. That is a little bit more optimistic than clearly these folks. Okay.
I gave you a pull forward Trump, but there's a lot of uncertainty here. So that if you're making a decision about who's going to be the candidate, that's again, I'm referencing a Semblance piece of JP Morgan.
To your point, though, Jim, some of these opening gainers, Live Nation, Capital One, are these expectations that Trump is the next president?
Yeah, well, Live Nation, absolutely, 100%. Capital One, again, because of the acquisition, 100%.
Yeah.
I mean, these are not. By the way, Richard Fairbank.
I'm going to mention, I still think that what I said is very much in play regarding Tesla. I think this is like this barcoding right here. Usually I don't like buying in an environment like this, but I think this is the seller's order book. Just logically. Like, I think of it kind of like, I think in the casino, it's like, do I have a little bit of an edge? I think the seller's order book at 200 is actually pretty thick. That's why every time we break 200, you're triggering sells. But what do you think happens when that sell order book is cleared and you don't have sellers right above 200 anymore? I'm just saying. I could be totally wrong, but you could lose all your money on Tesla today. This is not personalized advice. Go buy Salesforce or something. Also not personalized advice. Just saying. From a logic point of view, Bitcoin rising, Nvidia goes back to green. The Qs are probably going to be rising here. And then the $200, and then the $200 order book on Tesla. Oh, hot.
My advice then, by the way, when they go out to lunch, I can do this, I think, because I don't know where but oh, shoot, I can't. But what you do when you're at Goldman is that when you put your jacket on your chair when you leave at 8 o'clock at night, and then you just say, well, I was there all night. That's been, by the way, Eddie Lampert did that when I worked next to him at Goldman Sachs. He took his coat off. That wasn't brilliant. Meanwhile, I'm working really hard. But no, he's working harder than you. Look at him, he's pulling it all night.
Where's Eddie? Oh, he's around here somewhere. Yeah.
Oh, yeah. I mean, take your jacket off. This is to the 100. The guy who's working 60 hours next to the 100-hour guy, take your jacket off and no one's going to accuse you of not working 100 hours. You can fool anybody with that stuff.
Jim, you were right on the tape yesterday on Chewy, where you told your members to sell half now.
Yeah, well, because that stuff is. Look, the shareholder suit, by the way, on Ryan Cohen and Bed Bath & Beyond was very curious because isn't that the kind of suit that should have been brought by the government? We also saw, by the way, this is some sort of really interesting moment we should be thinking about. Under Armour paid a huge amount of money, but it wasn't the SEC. Again, it was private strike suits. Very, very important. And Chewy, I don't know, when Kitty and Ryan, this is an element that is not memesters, apes, ice cream cones. Reddit must be watched every minute. I get my bulletins. A lot of it is I'll say it, silly.
No, I don't look at Reddit, like, at all. So I don't think you need to watch Reddit every minute.
You know what Roaring Kitty's thinking, Keith Gill. I mean, they're factors. There's certainly more factors than half of this stuff that I come in with every.
Well, a couple points on that. One is we didn't get to discuss the SCOTUS decision yesterday about SEC in-house proceedings. Yes. The other is how many Google searches reference Reddit, and this Rosenblatt downgrade at Google has real questions about search.
Yeah, look, I mean, the stock's had a big run. People are unsure about what's going to happen. What is it? Impact. What's going to happen with search versus Gemini. I think search has gotten even better. I'm tired of bashing Alpha because every time I've said that it's almost over, it's found a new way to make money. And they're very smart. You're underrating Ruth Porat if you're saying something bad about Alphabet. And I've done that periodically, and I have never had anything other than a pie on my face when I do it.
Well, it's Barton Crockett, who I know you like.
Yes, very much so. He does a lot of
talks
work.
about nascent signs that Bing has taken some share. We know what's happening to search at retail, Walmart and Amazon. Maybe a higher than expected CapEx cycle.
It's possible, but Google Cloud's doing okay. Look, YouTube is the best way to reach people.
YouTube has also, by the way, started growing again. Like, there was a period of time you kind of saw some poopy-doopy over at YouTube in terms of actual growth numbers, and that sort of started recovering again. Look, I'm not trying to say I told you so. I think that we're clearing the 200. Okay, this is huge for Tesla. Like, if you're in Tesla, shh. Like, it's probably me looking at it. It's going to create a huge red candlestick, and I'm sorry. But I'm just saying, I think there's a trend here today, and I don't know. I could be wrong. But I'm seeing that same continuation of what we had yesterday with these some of these AI software plays. Okay, a little bit of a red candle on the Qs right now. This is kind of normal. You're going to get these sort of fluctuations, not horribly abnormal at all. And then Nvidia, also a little bit of a red candle, but you know it's trying to stay positive here. Stay positive. Yes, stay positive. Everything is going to be a-okay. All right, so let's listen in to the Doomers.
When we have the Fed cutting rates in September, obviously that'll be a very nice catalyst for the equity market. But I think the narrative is going to shift from not when and if the Fed will cut, but how much. So if we get just one cut and then a pause, I think the question is going to be, well, how far can rates really go down? And for the smaller cap stocks to rally, we really need to see a longer runway for rate cuts than what we're seeing currently.
So that's one of the known unknowns, right? Of course, what the Fed actually does, how many rate cuts does it actually deliver? The other known unknown, which you already highlighted, of course, is the presidential election that is quickly approaching in November.
I think that's now pretty clear.
Debate last night and the flash poll.
Although it depends what replacement comes in.
Among the public is that Donald Trump won that debate. But I want to give you a stat that I gave to Steve Whiting at the top of this hour, and that's that the S&P 500 has risen in 13 of the past 15 election years. So is there any reason to think that this year would be different no matter who wins?
Great question. So, for the elections, what we usually see is the volatility picks up really very close to the election. So,
usually have a sell-off in October.
October and November in election years, that's when you see the volatility really picking up. So, and that's when the market really starts to pay attention to the elections. In terms of the performance, what we've seen historically is normally after an election, the S&P does increase going in from the election into year end. And what we see in terms of who wins and how that works, usually if you have a Democrat president and a split Congress, you do see a better performance in the S&P, or if you have a Republican clean.
Oh yeah, the Congress, like the stock market loves the split Congress because it means nothing's going to get done. No new taxes.
But I think what we've seen historically is usually the S&P does perform well following an election.
All right, Nicole, appreciate that context. Great to speak with you again. Hope to do it again soon. That, of course, is Nicole Inouye of HSBC. Now, coming up, Biden and Trump face off.
We created 15,000 new jobs. We brought out the position where we have 800,000.
Yeah, we don't need to relive this. Sorry, we're not reliving the debate. Yeah, how much reliving I had to do yesterday.
In October, you just say inventories are very lean. And so what I think you've got is a guy who's not a...
You know it's bad when people who are big Democrat fans, which I'm like, you know me, I try my best to be like always just middle, mostly because I think just the average American mostly agrees with exactly what we should do. Like us as average, like if we were all in a room together, we could probably mostly all agree on like common sense logic. But anyway, it's crazy because like, you know, some of the nannies, for example, are of Democratic persuasion, or other people, or whatever, and and they just come in and they're like, it's like, okay, yes, we know.
Who is a remarkable general counsel for the NFL, and I would have liked to see something from the NFL explaining what to say or do. They're usually pretty communicative. I don't have.
Guys, get this guy's course. Last 2 days, I've made $18,000. Come on, he prints. Stop. That I cannot verify that. That is not a testimonial. It don't sue me, bro. Past performance doesn't guarantee future results, so I don't know. But that's good. Congratulations. That's really good. Okay. So Nike down 18% for any reason? Yeah. Sales are bad, and they're forecast to be really bad. You know, it's just the numbers are getting worse. The consumer's really hurt at Nike, so be careful. Let's keep listening in, Jimbo.
What does that mean? And he's got a knife in his hand. Get the hell out of his kitchen. I was trying to tell him that I own the restaurant. That meant nothing. But no, you say I own the restaurant.
It's like a lion. Only one lion can be in there.
I'm scared to death. I mean, you know, I don't go in the kitchen if you own it. You don't belong.
I need hands on 12. All that stuff really happens.
Corner. I mean, corner. I was told corner. The guy was going to like jump a hot bucket of fries on me, which is by the way more fries than McDonald's.
Jim, we're back above 5,500.
There you go.
On the back of PCE. Now there's Chicago PMI. Let's get to Rick Santelli. Hey, Rick.
Yeah.
Yes, a big surprise here on the Chicago PMI June read. We're expecting a number around 40, 47.4. Now, that doesn't sound great. It's under 50, but it's still the best read since November. But here's why the market on interest rates is moving a bit higher on this number and stocks a bit lower. Last month was over a 4-year low. May of last month's read at 35.4 comped all the way back to May of 2020 when it was 31.3. So even though it's still in contraction mode, it did have a big jump. And do keep in mind that 10-year note right now is hovering at 426. That's unchanged on the week. Pay attention to that 4.25 level. It should be significant. And pre-personal income and spending numbers, that 10-year was hovering around 430. Squawk on the Street will return after a short break.
Yeah. Big deal. Benign. Boring. That's a good thing. Okay. All right. So what's going on? Let's see here. Tesla bobbing around here. Bobberand. Then you've got the Qs. Bobbing. What is this? You're sitting at about, about 38 bips up. That's pretty good. Give them that. A little bit of a slowdown there on Snowflake, but CRM has a good trend going. BTC, 61.6. A little bit of a reject again at the 61.7. Not a horrible surprise. It's kind of what we keep getting over and over again. So, not a surprise at all. Okie dokie. So let's see what else here we've got. DJT. Wow, DJT is only up about 4.5. So kind of surprised. Thought it'd be a little bit better than that. You had a red candle coming in here on Tesla. A little bit of resistance at these various different levels, but I think this is, your pretty normal, typical kind of fluctuation. Then Affirm's moving a little bit. Oh, Nvidia is back up 1%. That's pretty bullish. End phase. You've got, let's see here. Yeah, Nike. Very nice. Okay. Q's. Very nice. Okay. Okie dokie then. Let's listen to the doomers.
To do what Lyndon Johnson did and make an Oval Office speech or make a speech and say, I'm going to step aside. Then, of course, there's another whole host of issues, which is who would fill that vacuum. This is what Terry Haynes was talking about earlier. He says he thinks that brings up too many other potential issues, that it's very unlikely that Biden would step aside.
Well, we're going to get to the list.
I don't know. I mean, then I guess you know who president is.
Timeline and how tight it is, and of course the complications that would come along with that. I mean, how likely are people saying that he actually could step aside here and not run?
It's really two different views. There's the one that's Terry Haynes that says it's very unlikely that can happen. And then Greg Valliere, who also talks to people in the markets and really tries to digest Washington for them, he had this out to say in his note. He says his bottom line is that Biden will drop out within days, giving an opportunity to a young, fresh face. So Biden camp today is going to be North Carolina, and then they're going to be in New York. He is going to be so closely watched, who he's meeting with, who he's talking to, who shows up to.
Yeah, it doesn't really matter, honestly. I think it's pretty obvious.
Any of this has broken through to him and his camp, because last night what he told reporters was, of course I'm running.
Of course I'm running. That, of course, is the message coming out from the Biden camp specifically. But, I mean, let's talk about who some of those new, fresh faces could be. It seems like California Governor Gavin Newsom, for example, his name has been bandied about quite frequently.
So the first obvious choice is the vice president, Kamala Harris. And she came out last night and she even said Biden, it was a slow start at the start of the debate, but felt like
she was defending him, though. She was pretty in defense of Biden there.
People felt like many Democrats are, you can look at some of the text messages, felt like this was a disaster. Gavin Newsom is interesting because he continuously comes up as someone potentially that has these presidential ambitions. He always says he doesn't. He's always there supporting the president. But if you look at the video of when the debate ended and the press that swarmed him, asking him, are you going to be the nominee now? It was almost instantaneous. Other governors, potentially, Governor Gretchen Whitmer, Governor Pritzker, Shapiro from Pennsylvania, there are names that are being floated, but again, whole host of issues, not just logistically, but also what does this mean for the party? Because there is an heir apparent, technically, with the vice president.
That's very true, of course, that those conversations also center around her as well. But we're talking about, of course, Democrats hitting the panic button, what that camp is doing this morning. Let's talk about the Republican side of things, because I have to imagine they're taking a victory lap right now.
They are taking a victory lap. They feel like in the flash polling, if you look at Frank Luntz and the focus group he had after the debate, it felt like people thought Trump won that. But also, when you look at some of the issues that came up and how Trump talked about them, there was a lot of...
Few quick things to note. Q's rising pretty well here. You've got Salesforce actually coming down a bit. And you did get that Bitcoin rejection at 61.7, which is a little bit on the bearish side. But Nvidia broke 125, which is bullish. So you've got a little bit of a balance, sort of a mix going on today, trying to find out the directionality here of where we're going. Let's keep listening.
Individuals who are going to decide this election. We're talking about a few 10,000s, basically in a few swing states. Did he say enough to assuage those concerns? Which is why for him the VP pick is going to be so important. And today he's in Virginia, and stumping with him is going to be Governor Glenn Youngkin, someone who's on his list.
There you go. Definitely something to watch there. And just really quickly, I'll ask you.
Yeah, but Vivek's been stumping with him too for a while.
A second debate.
Libby Cantrell says maybe there will not be. For Trump, why would you want a second debate? You want these clips of Joe Biden losing his train of thought to continue to circulate social media, continue to circulate TV networks until the election. If you're Joe Biden, you desperately want that second debate. Let's see. It's September.
Yeah, a lot can happen between now and then. Of course, Anne-Marie Horjern, really appreciate that reporting. And let's get to some of the sector price action this morning in the market. We're going to do that with Bloomberg's Abigail Doolittle.
We're looking at a small gain for the S&P 500 right now, Katie, up about 0.4%. More sectors are higher than not, so it is a broad-based gain. We have tech up the most, up about 0.75%. Some of that coming from the Apple strength on our own reporting about iPhones popping, the demand in China by about 40% after discounting. Industrials, energy also higher. To the downside, communication services, utilities, discretionary, and staples. So the day is still young, but the week right now we are looking at a fourth up week in a row. The S&P 500 up just a little less than 1%. Energy, the top sector on the week, up about 3%, in sympathy with oil, also up for a third week. And then it's interesting to note that the S&P 500 Media and Entertainment Index, well, that's up about 2.7%. Of course, we have some of these networks doing well around the debate. Fox apparently had a big viewership spike during the Trump trial in May, but then, of course, also at the debate more recently for all these networks. And then take a look at that, Katie. The stocks down 0.4%, really standing out. That chip strength kind of ebbing away, now down for a second week in a row.
All right, Abigail, thank you so much. Coming up, the market-moving events you need to be watching. That's next. This is Bloomberg.
Yes. I don't know. Yeah, I thought we were supposed to get a VP pick yesterday. We didn't get that. I was a little surprised by that. Oh, well.
Instead, I think people are going back to remembering that it was a good time for the stock market. The amazing thing, of course, it's been a good time for the stock market under Biden, but it's never accrued because Biden is not a fan of the stock market. How do I know that? Because he told me many a time on the train down to Washington.
Pretty vocal about that.
Yeah.
Meantime,
he always was priding himself on not being involved, and that's okay.
Plus,
not for everybody.
Goldman reminds us again today that the first 2 weeks of July have been the best 2 weeks of the year, back to 1928.
Summer rally. I mean, it's funny. The summer rally is real. The sell in May is not. The sellers seem to just go on vacation at the beginning, and a lot of new money comes in. Nothing new there, and that's a very good sign. By the way, it's a good sign for the mega caps. They're all in Apple is the leader this time, not NVIDIA. Apple is a consumer-led company, which is, remember, the other ones are enterprise.
Yes.
People are more suspicious of the enterprise other than ServiceNow, but they're not as suspicious or as critical of the consumer side.
Yes, well said. How about tonight?
Okay, I've got Salesforce, which is one that's coming back. That is
Speaking of enterprise, yeah.
That's very big enterprise. And then, yesterday's Zoetis was up big because Elanco didn't get the full approval out of Black Box Warning for some pet care, for a very important pet care drug. And I think pets are back at Witness Chewy. And I think that Zoetis is a big winner here, and Christian Peck is fantastic. So that trade's back. The pets are back. It was like it kind of stalled, and now pets are back. And hallelujah, because I think pets are great. I'm not a big fan of when people go and buy those curated pets. There are so many pets that will be killed if we don't go into the shelters. Go to the shelter.
What are curated pets? Does he mean like, like, oh, it's a pure breed or whatever, like, or you kind of pick the mix you want or whatever?
Jim, it's an important note. We chopped a lot of wood.
Is that called a curated pet?
Yeah. Right, that's what we do for a living.
Yes.
So we give them what they want.
We'll see you tonight.
Okay.
Mad Money, 6 p.m. Eastern Time.
Thank you.
When we come back, Wharton's Jeremy Siegel with his market outlook as we get ready to wrap up the first half, and we're within an arm's reach of an all-time high. Stay with us.
Yeah, I don't know what they mean by curated pet. I'm going to give that a little Google here. Curated pet. No, I just see, like, Etsy things. Maybe Jimbo's been spending too much time on Etsy. Oh, well. Okay, so what else? Let's see what else is in the news. In the news. Nobody knows what is in the news. Fed's preferred inflation gauge shows inflation slogging along. Biden disastrous debate accelerates doubts. Oh, you know it's bad when Doomberg is saying your debate was disastrous. Wow. Is that almost tweetable? I don't know. I think it's just redundant at this point. Yeah, I'll put a picture of that up because I think it's really interesting. It's bad when Bloomberg describes the debate as disastrous for Biden. Yikes. Okay, so Qs are moving up. The trend is pretty clear today. There's a lot of optimism in the market. Enthusiasm about pricing in a Trump presidency. There's enthusiasm for interest rates getting cut rapidly. There's enthusiasm for Tesla breaking 200, which is a big deal. There's been some enthusiasm in the software names. To some extent. You've got Adobe. That 551 is a pretty critical level for Adobe. Look at that. 125 is also a pretty critical level for NVIDIA here, which is trying to move up. It's trying to break up. One thing that's hurting you a little bit is BTC's being quite bearish right now. So you do have these candles down on the risk asset sticks here, I like to call them. The Bitcoin maxis get mad when I say that, and then to that I say, make sure you have your maxi pad. Then you've got Nike over here that actually keeps selling off. So, sucks for Nike, but they're now down 18.5%. I wouldn't be surprised if you just get money that moves out of these and starts moving into the interest rate sensitives. Let's see if Enphase is moving, or is it just Tesla today? Yeah, it's not Enphase today. It's not solar. It's the NASDAQ, NVIDIA, Tesla, and then some of the software AI plays. All right. Pop on over to the Doomers. Not on. They're on commercial. Oh, yeah, nice little gap up there again. Oh, 7 o'clock. Did we just get data? Let me see here. Oh, Tesla just had a candlestick. University of Michigan sentiment, the actual inflation sentiment comes in lower than expected. Let's go. Green candles, baby. Green freaking candles. Woo! Oh, let's freaking go. Oh, yeah, buddy. Yeah, give it up. Wear those new shoes. That's awesome. So, the University of Michigan Consumer Sentiment Index falls for inflation expectations, which is great. So what we have here is we've got an expectation of 3.2 on the 1 year. We got 3.0 positive. We got expectations for the 5 to 10 year at 3.1. They came in at 3.0. Let's go. Then you've got University of Michigan sentiment coming in stronger than expected, and expectations coming up. Let's go! So great news really just across the board there. Very, very, very good. Good job, Consumer Sentiment Survey. Pump it up. Don't you know? Oh, gosh, yeah, look at the Qs. Look at the volume coming into the Qs here. You get the bullishness coming into the Qs. Big candlesticks here. Very nice. Tesla is just going to continue its ride right here. It looks like we got almost rejected there at about 202.79. It's all right. You've got a good movement on the day. You've got Dobes. You've got a bounce on a firm now as a result of that. Oh, look at NVIDIA. Here you go. There you go, NVIDIA. I mean, yeah, you got to give them credit where credit's due. You can't keep NVIDIA down. So that's, and then you did get some love out of Bitcoin after that as well. So let's see if they're talking about it right here.
Fed's point of view, 20th and C Street, as long as we're doing addresses, inflation expectations drop. 1 year inflation expectations fall to 3% from 3.3%, and the University of Michigan's 5 to 10 year inflation expectations fall to 3% from 3.1%. So completely good news throughout this report, and it follows, as you mentioned, good news from PCE. The PCE rises just, it's flat for the month, we'll call it. It actually came out to be about a negative 0.01%, and that pushes the headline year over year to 2.6%. The core 0.1% also sends the year over year to 2.6%. And then what we get is spending up and wages way up in terms of overall compensation, 0.7. So good news across the board on the economic data today. It should be good news for a candidate. That's a different issue, but it is good news for the Fed.
Why do you have to dance around it anymore at this point? Like it's like It's either a replacement or it's Trump.
Issue head on. Like you said, this should be good news, of course. It's a difficult message to communicate. Walk us through that a little bit.
Well, the problem is, first of all,
It is possible, by the way, that pricing in a replacement isn't as ideal for markets. You know, like, what's Gavin Newsom going to do to the stock market? They're just saying, like, if he's an option, then he ends up having a chance. And so then that has to get priced in.
Exact reverse. And you can see right in the middle where everything crosses, that's January of 2021 when Joe Biden took power. Now, Democrats think the economy is great. Republicans think the economy is terrible, and independents are in the middle. But the disturbing thing for the Biden campaign is that not only do we see independents much closer to Republicans, but as you can see on the right-hand side, that even Democrats have been discouraged lately. Now, a warning, that chart did not include this last month because the debate was only last night. But it does show that there is work to do. Even if Americans are feeling a little bit better, they're not feeling great yet.
All right, Bloomberg's Mike McKee.
NASDAQ's almost up a full %. It's crazy.
I like the red, white, and blue. It was a nice touch. Let's get to the markets, though, with Linda Dissel. She is senior equity strategist over at Federated Hermes. And I want to start with politics, of course. It is the topic of the day. And when you think
That's all they want to talk about today. Might go back to Jimbo.
the past, I mean, how do you account for any potential volatility, or do you just look right through it?
Well, good morning, and thank you very much for having me on today. It's especially interesting after watching the debate last night. And yeah, very, very interesting to talk about. Historically, you have a volatile summer in an election year. And we at Federated Hermes, we have a 5,200 target on the S&P, and we're at 5,500 now. We still are bullish on the market for 6,000 next year, but we were reluctant to lift it, as many others did do, because we thought we might have a volatile summer. And you may have a volatile summer with the politics this year, but that's okay because we've been up very, very strongly. And we still very much believe in that whole broadening out play that may have just started last week again here, which would take the markets towards 6,000 into next year.
Well, Linda, walk me through that a little bit, because at the benchmark level, if you're expecting a decline there actually to the end of the year, how can at the same time you have that broadening out outside of just, of course, the big benchmarks?
Well, it's just the problem is we want to tell what we think the year-end number will be, but you have never seen a market so concentrated where 37% of the market cap is just 10 names. And if one of the names in this next quarterly review say something wrong, like Tesla has done, and falls out of bed, you'll see the S&P fall fairly quickly. But it's the broadening that will show the health of this whole economy and the whole market. So it's really tough to put a number when you're so very concentrated, which is why we really want to emphasize that we're bullish into next year with the 6,000, because we just don't see a recession coming on.
Yeah, and appreciate that context there. I want to talk about the broadening out a little bit more, because you think about it, of course, how just the price differentials between small caps, mid caps, and then, of course, the large cap benchmarks. And then you think about the strength of the economy. It seems like a pretty straightforward trade when you combine that with rate cuts, and still you haven't seen a sustainable broadening out. So what is finally going to be the catalyst, Linda?
Well, you know, it's a very unclear time. People are having a hard time even figuring out where we are in the economic cycle now, because you have these mixed numbers that are coming through, and we've even had that this week with the regionals being quite mixed, and the housing numbers really not good. But when you look at inflation expectations, which are huge and can be good news for us as we look at the Fed, when you see the jobs plentiful versus jobs hard to find index, which was great news this week, it's all about jobs, and it will be all about earnings. And the earnings, as we will know and will come to hear more and more in these next 2 quarters, the back half of the year, will be much easier year-over-year comps for those cyclical areas that have yet to really catch the bid that we expect that they will do. So we're watching for earnings results, margin comments into the second half of the year. Employment stays good, and that is a really nice setup into the end of this year.
It's an interesting conversation to have over expectations here. I was just talking with Nicole Anui of HSBC in the earlier show, basically saying that, for some of the bigger areas of the market, expectations are too rosy when it comes to both earnings and the economy. But it sounds like what you're saying is for some of those more cyclical names, actually expectations maybe are a little bit easier to surpass here.
Yes, it's interesting that the second quarter expectations for the earnings growth, when you exclude all things tech, is just 2.5%. So the bar should be reasonably easy to reach and go over. And the valuations are just very, very good. It's just been too easy, too tempting to go ahead and buy those names that we all know very well, and they just keep going up. Seems like the safest play. But if we start to see, and so as you suggested, small caps, cyclicals are inexpensive versus history. The cyclicals and the large cap cyclicals should be the easiest ones next to go for. We made a run at it last year, and then we just came back to the big names early again this year. We could make a run at it again here if we feel good about second quarter earnings going into third.
And Linda, I'm curious that when you're looking at earnings and you're looking at the fundamentals of a company, what metrics are you most paying attention to right now? I hear a lot of focus on cash flow, for example, on net.
This is boring. This is really boring. I gotta change the channel. I can't handle it. Too boring. Not enough insight. Oh, this is a lot more fun.
Rates, September, December. We're going to hear from Fed Chair Powell on Tuesday. He's going to be on a panel with me in Sintra with the head of the ECB and the head of the Bank of Brazil. I think it'll be interesting to see how he reads recent inflation reports like today's PCE and how much evidence he feels and how many months of good data he feels that data needs to behave for him to get to cutting mode. Yeah. Because it's all about the nuances in these answers right now as the market tries to game out one or two.
It's hard to think you need more than one more. Especially considering you're tracking for where the Fed thought inflation was going to be at the end of the year. They never thought they were going to have to wait till they were at target. And they're talking about optional insurance cuts, not rescuing the economy. So the scene is set. We'll see how he treats it.
Meantime, last night's debate front and center for investors. 67% of respondents to CNBC's latest Delivering Alpha poll saying the former president is better for the stock market. Let's get to our Eamon Javers with some key headlines from the debate. Eamon, I don't know if you're on SCOTUS watch as well.
Watch simultaneously here, Carl, at 10 a.m. in the morning. Look, this was not a debate about policy or ideas last night. It was a debate about competence and capacity. And Joe Biden's meandering and sometimes incoherent performance immediately raised questions among Democrats this morning across the country as to whether he should be the party's nominee. But there were some moments of conversation about the economy in the debate, particularly early on. Here are a couple of those moments.
He caused this inflation. I gave him a country with essentially no inflation.
Yeah, this was a big part right here. And then Biden admitting to it being flat.
Destroyed it with his Green New scam and all this money that's being thrown out the window.
He decimated the economy, absolutely decimated the economy. That's why there was no inflation at the time. There were no jobs.
Carl, among the many questions swirling this morning is whether there will even be another debate between these two men. There is another one scheduled in September, but the Trump campaign may feel so confident about their candidate's performance last night that it's just not worth engaging for them in a second debate at all. We'll see what happens, but a lot of questions swirling this morning about Joe Biden's viability after we saw that moment where he just kind of froze up and was unable to come up with an answer. Smaller moments happen throughout the debate like that. Real questions now this morning, Carl.
Do we expect it, Eamon, to have an impact on fundraising dollars? Do we expect it to have an impact on the money that's been flowing from the Democrats to Biden?
Well, we'll see. I mean, one way that Democratic power brokers can make their opinions known is by toggling up or toggling down their giving. So we'll see over the next 24 hours what the fundraising is like for the Biden campaign. The question is, really, though, one for Joe Biden himself, right? Does the president feel that he has the stuff after last night to take on Donald Trump? That's a question for him to decide.
I think it's so interesting hearing the finance channels talking about we rarely hear them talk about Trump versus Biden.
Scenarios you can see that would realistically play out here where Democrats would challenge Joe Biden and try to force him out of this race. That doesn't seem possible at this point, but it's early. And this is uncharted territory here, guys.
It's going to make investing decisions even more complicated in the back half of this year, Eamon. Thank you.
NVIDIA continues to move. You're about 2.5% on NVIDIA. I will say a little bearish still there on BTC. Look at those red candles on BTC. It's not, you're not like broad-based, all in, like let's everything rally right now. It's very selective. You've got NVIDIA breaking out above. You had some recovery at end phase. You do have the Qs, which had a beautiful leg up here after the consumer sentiment surveys. You've got Nike down 18%. Tesla's doing a bit of a consolidation, so not great if you got 0 days. Adobe, nice little bounce there, 551. DJT actually goes negative, somewhat surprising, but that's also a sign of buy the rumor, sell the news potentially. Then you do have BTC at 61.2. A little bit of run up here on NVIDIA continuing. And now about 2.7% on NVIDIA. Robinhood's under its 22.56. Rivian continues its bleed. Faraday Futures bounces on 44. Whirlpool's trending up a little. Microsoft's trending up. Meta's trending up. Hut 8 is up, but not trending up. And there's Tesla for you. Roughly at about highs of the day at the moment. Lloydie?
On the Democratic side, easily beat Trump. So it was sort of an interesting juxtaposition between these two men. So yeah, politics is important there. On the economy, I would say the recent data has been on the weakish side, not real weak, not a recession scare, but we were coming in 3%. A lot of people the second quarter 3.5%. I would say we're barely two at this point with the data coming in. And given the good PCE data and what I think is going to be very good data for inflation in the second half, I really think the Fed should tee up a cut on the July 31st meeting, confirm it at Jackson Hole in August, and do it in September.
Do you think the market's already priced that in?
Well, I think the fact that the yields are down and the stock market up, and those probabilities are priced in. Actually, my feeling is, I would say maybe 1.5 cuts is priced in. If you look at January Fed funds, I actually think there will be more, because I think there might be a little bit more softness of the economy and better inflation numbers. Both of those feeding lower rates. Now, slower economy isn't the one that you want to be good for the stock market, but lowering inflation is certainly, and rate cuts because of that. And
yeah, they pulled off the mic mute. That's a good. I mean, this is a little boring, but they actually did a good job with that mic muting technology. I'll give them that. That was not bad. I think the way you kind of have to look at it is, I mentioned in my sort of debate expectations video, if they had the faces side by side, it would probably be okay, because then it would feel like a debate. What you wouldn't want is like a speech from each of them, right? And they did. They ended up having the faces side by side, so I got to give them credit. I think they did a good job there. They did essentially exactly what they should have done. So I think the mic muting was actually kind of enjoyable. It certainly kept it a little more level-headed.
4 years or so. It seems as if the market has built in a lot, although, of course, if you count it from the 2022 high, we're not really over our skis. I wonder where you think we are in the life cycle of this bull market.
Well, it's hard to say, because that's almost saying, you know when it's going to end. Listen, P's going forward, they're 21. But with strong momentum on earnings. And as has often been said, there's a bifurcated market. You take out tech and you're more at 17. You go to the smaller and mid-size, you're more like 13 and 14. Tech is, as I've been saying, has been delivering the bacon for all those investors, and that momentum is still there. And I've been saying that.
BTC is still pushing a little bearish. You're still seeing that BTC crash.
X-Tech, there's absolutely no overvaluation, and tech is not overvalued if it keeps on pulling off the earnings gains that it has been able to do so far. We are also, thank God, nowhere near 2000. The question is, are we in 1997, 98? No one really knows. It started like that. Could there be a craze? There always could be in markets, but certainly we are not there yet.
Yeah, even a lot of the ardent bulls we talked to lately say we're not seeing the mania that we all remember from those days, Professor. We'll see what certainly earnings season gives us. Have a great weekend.
Yeah, it doesn't feel manic or mania style-esque out there, that's for sure.
Here's our roadmap for the rest of the hour. The streets take on Nike and where the stock goes from here as shares plunge now down more than 18.5%.
Plus, speaking of tech, it is up almost 30% in the first half. Don't miss a closer look at what investors need to watch as we head into the second half of the year.
And Apple's Vision Pro hitting some stores in China. We're going to go live to Beijing for a look at that launch, where prices are even higher than they are here in the U.S. when Squawk on the Street continues.
Does anybody in the chat actually use the Vision Pros? That'd be very interesting. Okay, let's pull over to Doomers. And looks like you just had a little bit of a rotation down on the Qs, multiple others as well. BTC just keeps tanking is the problem. You can see that right here. It's just a bad omen. I don't love it. As soon as we lost that 61.7, we really started coming off the highs of the day for a lot of stocks. We'll see if they'll end up being a bounce. Same thing over here on the Qs. All right, let's listen in here.
To see Kamala Harris. There are all sorts of, particularly African-American voters, voters of color, and women as well, who you meet them and they say, where is Kamala Harris? Why isn't she doing more? Now is the time to answer that, to put her out on the stage, to give her a more front-facing role in this reelection, because she is a better messenger than Biden is.
Right.
She is a better spokeswoman for his administration than he is, and this is something that the campaign really needs to understand right now.
Well, to your point that, of course, Harris is an asset and that the administration and the campaign should be using her more, is there a risk there? Because you think about how the Republican Party has treated her and talked about her, they've really vilified her.
They did. Listen, and some of that has to do with the fact that she is a woman, and some of that has to do with the fact that she is a woman of color, right? Americans aren't used to looking at a woman in that position, right? We, of course, saw what happened to Hillary Clinton. This is something that Americans are still dealing with. What does it look like for a woman to be in power? What does it look like for a woman to be the leader of the free world? Putting her out there will help Americans get used to that. Will there be some blowback? Absolutely. But there will also be, I think, some rallying behind this ticket, because there are plenty of people who would want to see a woman president, a very strong and very visible and powerful second in command, because that's one of the problems. It is, that Kamala Harris isn't as a visible presence in this administration. And I think running, I don't know if you remember when Bill Clinton ran for president, it was this idea of you get two for the price of one. He, of course, was talking about Hillary Clinton. That is something that Biden needs to start telegraphing as well. As a candidate, he said he was going.
I don't know if pitching Kamala is that going to help much. I don't know if that helps much. So I find that very interesting. Anyway, all right, let's go back in over here, and then I got to make some more coffee soon.
And price target cuts from Wall Street this morning. Last night, the company reported it missed on revenue estimates, cut its full-year guidance, saying that it now expects sales to drop 10% in the current quarter. And for 2025, which it's going into that fiscal year, it expects sales to decline in the low single digits. I did speak to some senior executives at the company, and here's what I can tell you is not going right now. So the lifestyle business declined. This is Air Force Ones, Air Jordan Ones, and Dunks. The performance business on the other side, which is more basketball and running, that grew double digits, but it wasn't enough to offset the declines in the lifestyle business. They saw digital weakness, and this was somewhat of a surprise in April and May. But the way they explain it is it's a higher percentage of lifestyle shoes like Air Force One on the website, which is why they saw that fall off. And then traffic in China really started to decline in the beginning of April, and they chalk that up to the macro concerns there, say it's a very promotional environment. And
it's bad when they're still talking about China's macro being as bad as it is. You know, there's so many folks that are like, oh, China, buy the dip on China. Yet consistently in earnings reports, it's always China that's the problem child. Over and over and over and over again. So I don't know. It's a tough bet to make on China. That's why I like America so much. Train America, because you kind of know what you're gonna get. You can do Ross Gerber research or earnings call research and understand the colloquialisms or whatever, the hints. You can read between the lines.
That it needs and that it has the right strategy in place. Our next guest says Nike is a mess, deflated, and that the company doesn't hold a candle to the Nike brand 7 years ago. Williams trading analyst Sam Poser joins us now. And Sam, I have to give you credit. You've been very critical. You turned on this company, a few months ago? Despite a lot of the analysts saying now's a good time to buy, you said it's going to be bumpy from here. So I assume you feel pretty vindicated, given what we heard last night.
BTC bottoming, by the way.
Vindicated. I just hope I help some people make some money or not lose money. But look, the big problem here is, and you brought it up, is they've lost a lot of people. And a couple things that were said on the call, one, that they're reinvesting some of the $2 billion savings into talent. Number two, that they said, we've done this before in 2018. And then lastly, at the end of the call, the CEO said, one of the best things about Nike is the people and its culture. Well, they laid off a lot of people, and I don't know how well that culture still exists. And, that is the foundation of the business. And 7 years ago, when they came out of this before, or 6 years ago, that they had the foundation of that culture. It's not there. It's got to be rebuilt. And I think it's just
the foundation of the culture. This person's just striking deep over here at Nike.
There's risks to the gross margin, even in this revised down guidance.
Why? Because, they were able to grow margins and they had a big profit beat. And the whole mantra has been profitable growth. Isn't it the revenue growth that the street is more worried about right now?
Well, maybe, but the thing is they're going to switch from selling through at direct to consumer to selling in at wholesale. So you have a mix issue there. And then you're counting on this new product that's going to sell through at regular price. And while there are a few things that are doing, well right now, Nike's a huge company. This Air Max DN isn't selling through well. They've pulled back on the three shoes that you mentioned before, but they're telling you they're selling more of those into wholesale. And sell in and sell through do not necessarily match. And that's the problem here. It is, I think the back half guidance is still hopeful. And Nike has a lot of leverage with their retail partners to say, you got to take this. So their wholesale book is a lot of, we really need you to take this.
I guess where you could be wrong, Sam, is that if this is a kitchen sink quarter, and that's what some of the analysts are trying to ponder.
Oh, okay, kitchen sink quarter. That's an interesting way to phrase it. Basically, what you're saying is you're just going to take all the bad news and throw it into the report, so that way you could grow from there.
What I've heard is they see consumer reaction to some of the new shoes, the new Peg, for instance, in running. And while they're not taking back share yet, they feel confident that that's coming because they see the reaction from wholesale and from consumers to some of their new products. And that should sort of ignite the turnaround. That's the bull case.
It should. The question is, will it? And the thing is, if you compare this company to Adidas, had a lot of their core classic products sort of nascent for a while. They're bringing that back while they develop new product. Here, you've got your best product you have to pull back on, and you have your fingers crossed on the new product. The Air Max DN is not working. The sell-through rates on like the Jordan 4 that launched a couple weeks ago are disappointing, to say the least. A lot of that stuff's going to have to get marked down. They felt very confident at the end of the third quarter.
So markdowns are terrible because you kill your inventory on your balance sheet, the valuation of it, and you're getting margin compression and revenue compression. So markdowns just suck all across the board. It's like a perfect way to get reamed.
Double digits into the print, now down another almost 20%.
Well, I lowered my price target to $67, but what I would say this is, I mean, they have to prove that they can, that you know, they know what's going on, that they have the people and the culture to do it. And I think that at the end of the day is the real question. You can look back, but it's a totally different crew there now, and I would argue it isn't as established a crew as what they've had in the past when they've got out of this in the past. So, you know,
there you go. Well, it is coupon expiration day, so check out the courses on building your wealth at meetkevin.com. Remember, we've got a mastermind now as well. That's a super small group, sort of intimate, entrepreneurial, and get ahead in professionalism masterminds. See that at meetkevin.com/mastermind, or just go to meetkevin.com in general. So that means it is probably time to do one last quick check here of what's going on. You've got a bit of a consolidation going on at the Qs. Not unusual. You had a pretty good rally there after good PCE data. You had good data on the University of Michigan's Consumer Sentiment Survey. You just had a good data morning. The question is the market going to actually be able to rally on this, or is there too much of an anchor on the market? Well, the answer to that will determine whether you make or lose money if you are going long the market today. So, right now, you do have this bad omen of BTC. It's been on a downtrend, unfortunately, now for about 45 minutes. 45-minute downtrend on BTC is really painful because it sends a bad omen to the market. Now, the question is, are we going to break all the way back down to 58,000, which is the low that we hit a few days ago, or do we bounce from here? That's the big question right now. TBD, we have no idea, but I'm going to be paying a lot of attention to this. I wonder if we are going to break these lows of the day or where we're going. 69, so 60,900. It's not a really good line. It doesn't seem to function when I look back at history, but that was the low of the day. So I think we'll have some more bearishness pricing into the market if this level continues to decline. So I'm watching this as I'm talking about it. You literally have red candles coming over. So we'll watch BTC very carefully. Now, in addition to that, you've got the interest rate sensitives. Enphase is kind of moving sideways. Tesla gave up some of its euphoria from breaking the 200 level. That could be because volume's declining a bit right now. Usually volume declines for Tesla are going to be a little bearish. However, we've seen plenty of times in the past volume comes out of nowhere for Tesla and the thing rockets. The Qs just had a little bit of a sell down. See, this is kind of what that would look like. You get volumes decline, the price starts bleeding, all of a sudden you get a big green stick and you get a surge in price. We'll see if that ends up happening at some of these other plays. Salesforce, Snowflake, Adobe, somewhat sideways. Somewhat surprised that DJT ended up going back to the 35 level here. I've got a 35.10 line. It looks like it's sitting at, 35.41 is my line. Looks like it got down to about 35.41 with BTC still struggling to try to make a bottom over here. Really rough, probably too hard to say on the 1 minute. This is your 5 minute where you're kind of barcoding around that that low of the day. I really think if you want to see bullishness today, look at Bitcoin first and you could see it move up. Someone here saying they're bullish Apple for 7.5. We've got Apple coming in at 40 basis points to the upside. Yeah, that 215 is a pretty decent level for Apple. I still think this one's got to move to like 220, 250, somewhere in that range. So, I've got a good chunk of exposure to this one in long shares as well as Tesla. The market has been pretty low volume in the middle of the days lately, so is a risk factor to watch for. But we'll see what happens towards the end of the day, and we'll see if we can get this recovery on the BTC. Then we'll also see what happens with Biden. Oh, I guess the thesis is, okay, maybe he'll be fine in terms of he'll stick it out. Then I think you've guaranteed who the president is, though. So we'll watch. We'll watch. Are getting an uptrend right now on Tesla. We'll see if that continues. All right, we're going to push the button now. Here we go.
Go yourself. Is that clear?
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Apple pushing a little bit, CRM pushing a little bit, Tesla starting an uptrend here, almost at a 5-minute uptrend there. You're just now on your 4th minute on the uptrend. Nvidia trying to go for a little pop as well. See what happens. It's going to be exciting. All right, folks. We'll see you soon. Thanks again. Bye.